Okay, sorry for the interruption. I hope everyone had an amazing 2025, and I know this is the time of the year where everyone's excited. They're getting all their tax documents ready. So I figured I'd do a quick live. I know that I didn't give too much of a short notice. It was a short notice. So if you have any questions or comments, please drop them in the comment section below, and I'll do my best to try to get to as many comments as possible. But this is where I'm going to lay out how you can do your crypto accounting too. I know in the flyer we stated that we will cover deadlines and extensions, 1099 DA reconciliation, and setting up your crypto tax software. But I've added more content to our live session. Those that are joining from the Akif CPA's channel, thank you so much. And please subscribe to our new crypto tax channel that is going to be featuring only and only the crypto tax videos. So then they're going to show up in your inbox or in your stream. So let's get started. But before we get started, I know that a lot of folks are thinking and waiting on this new 1099 DA form. You probably will be getting this new 1099 DA form basically at the end of January. That's where you should be seeing this form. And now we will talk about the data mismatches and few really important topics as they pertain to crypto tax accounting and making sure that you're providing a full data set to the IRS. So let's get started, and I'm going to share my screen. All right, here we are. Let me go small. And the other way around. How does this work? This way. Here. All right. So let's talk about deadlines and extensions, right? So end of this month, you should be getting all of your tax forms, and most companies and entities are pretty good about rolling out the forms, whether it's W-2s, 1099s, K-1s. But this is the first year that you're going to receive this new 1099 DA. So expect a little bit of delay that could happen, basically. So don't jump the gun and email your exchanges, and make sure that everything is don't worry too much about it, basically. So W-2s, end of January. All of 1099s that you're going to be receiving also by the end of January. The new 1099 DA form, pretty much the same, but I think it probably would be maybe in February as well. So just be patient. Personal taxes, when are they due? Personal taxes are due always on April 15th. Businesses, if you have a business that is a LLC of some type, whether it's a 1120S, which is an S corporation, or a 1065, which is a partnership, those are due March 15th. If you have a business that is a C corporation, that is due April 15th. And if you have applied for an extension, or which you can, all the way up until April 15th or March 15th if you have an LLC, automatically you will be granted a 6-month extension. That means September 15th or October 15th. Okay. So make sure that you're filing for an extension if you don't have all your crypto data ready or your other tax documents, because you don't want to be delayed. And especially when you're owing taxes, you're going to be they're going to assume interest and penalties. It all depends on how much is owed. So make sure you're applying for that extension. All right. So when it comes to crypto tax and accounting, it's always give me 1 second, please. Yes. I'm going to just message my coworker real quick. Okay. When it comes to crypto tax accounting, you know that you need to know the basic rules, those taxable events. Crypto to crypto trades are taxable unless if it's a crypto that you're wrapping into a version of its own. For example, BTC to wrap BTC, those are swaps. Those are, well, when we say swap, we're basically just deferring the cost basis. Those are non-taxable events. But again, these are terms now in crypto. You need to also look at the glossary of your crypto tax tool to know what they're calling this particular thing. So swapping also can be seen as an exchange, right? But in some crypto tax tools, they use swap to push the cost basis forward because it's a non-taxable event. So any kind of income that you received in crypto, it's taxed fair market value the minute you receive it in your wallet. So remember that. You know about the staking, you know about the airdrops. If you're spending crypto on any goods and services, you know that that means that you're selling your crypto. That means that you would need to report your crypto to crypto trades because it is a sale. Non-taxable events, purchasing crypto with fiat, just USD. That's like you buying a car, or you buying, let's say, a piece of furniture. So you might be paying sales tax, but that's to the state government. But then that's your asset, right? That is the asset that you hold. So there's no taxes on the federal side when you're purchasing crypto. So whenever you go from USD to or from fiat to crypto, you're not that is not a taxable event. Any kind of yes, BTC to wrap BTC, non-taxable. Transferring between your own wallets, non-taxable. Receiving gifts or inheritance in crypto, non-taxable. Loans in crypto, if you received a loan, that is also non-taxable. So now let's talk about the new Form 1099-DA. This is due at the end of January 2026. Most centralized exchanges, they should be issuing this first batch, and there is a transitional relief for DeFi brokers. But we will talk about the actual form itself too. But you will notice that there's going to be some discrepancy or some inconsistency that you can certainly fix when you get into the actual form, and we'll get to that too. So hang on one second. So this is how the new 1099-DA form will look like. You'll have your name, whether you're a individual or an entity, your taxpayer identification number. Then you have, sorry, this is the filer side. Then you have the recipients, that would be you. Your information will go here. Now, most cryptocurrencies now they have a database where the IRS and the Department of Treasury, they're actually identifying or they're giving each crypto a digital token identifier, and you'll get that number here. So Bitcoin is not going to have two different types of digital token identifiers. It will only have one. So then basically this is the way for the government to standardize crypto reporting as much as possible. You will get all the details furnished here on the side, including all the proceeds, the cost basis, the date of acquisition, the date of disposition, the sale, and all of that. And one thing that will be suspect in a lot of these new issued 1099-DA forms is going to be box 1G, which is the cost basis of your crypto that is coming here. Most of these, by the way, in the first batch of these 1099-DAs, the government has exempted the centralized exchanges from putting a number in this box. So this year, most likely this box will be empty. So this is something that they're doing intentionally. And next year, you will have a number in this box. Why? Because they want to reconcile this data as much as possible. Because whenever you move a crypto from a self-hosted custody wallet back into a centralized exchange, the centralized exchange does not know the cost of that crypto that's coming in and also the date of purchase. So when you don't have those two things, you don't know if this is going to be a long-term disposition whenever you sell it or whenever you're cashing out. The centralized exchange like Coinbase doesn't know. It just knows that a crypto came in out of nowhere and I have no data for it. All I know it's worth this much at this time. So if you sell it or convert it, they're going to assume that you just got it for free. So they're going to say that you're going to pay the entire capital gain on that sale or exchange. This is the biggest issue that you're going to see in the 1099-DA form. And I'll get to how you can reconcile. I'll get to how you can fix this and provide the full information. But you need to start providing basically or doing your crypto accounting before the annual period. For example, instead of jumping into your crypto trades and cleaning up all your crypto data in January of the following year when the taxes are due in April, it's better for you to do this on a quarterly basis or maybe on a semi-annual basis, because you would remember all the information. At the same time, you can also basically provide information to your centralized exchange. Every centralized exchange like Coinbase, Kraken, Gemini, everyone, they're going to have a section in their settings or transactions where you can filter. You should be able to filter by zero cost basis transactions and provide that data to the centralized exchange so that this form is accurate. So, but obviously, if you are a heavy trader, if you are someone who's moving a lot of crypto in and out, this could be a huge exercise for you at the beginning of the year. And when taxes are due in April, it's going to be very, very hard to come up with the right 1099 DA form. So basically make this a habit in 2026 that on a quarterly basis or semi-annually, you're going to go back, log into your centralized exchange, go into one of their sections. It'll be in the tax section or somewhere it will state that you have this incoming crypto for which they don't have the cost basis and the date, and plug that in there. And if they need some information, provide that information. That's how you will get a proper form. Because what happens when you don't get a proper form? Well, if you don't know how to fix or make changes to a form, then you're going to have a data mismatch and when you're filing your tax return, and that data mismatch is what's going to lead to a potential letter, and then it could potentially lead to an examination. So you really want to make sure that this form going forward is accurate by the centralized exchange, and you're not having to put in adjustment codes in 8949 and having to do this on an annual basis. So remember, please go into your centralized exchanges, Coinbase, Kraken, Gemini, all the big ones that are part of the US jurisdiction. Go into the settings. They will have a section where you can provide the cost basis and the date of purchase for the crypto that you move from your self-hosted or self-custody wallets, such as MetaMask, SafePal, Kepler, you name it, back into that centralized exchange. So, so if you do that, then this form will be accurate, and you can actually see it. And make sure you have the right accounting methodology also picked, FIFO, LIFO, HIFO, and we'll get to it. I'll show you. Okay, we're not gonna. All right, so yes, so by January, February, you're gonna receive the new 1099 DA form. Make sure you're pulling in all the cost basis, calculating all the how do you calculate a basic capital gain? It's proceeds minus your cost. Simple. Whatever you sell minus what you paid for. That's your profit and that's your gain or loss. Now, long term and short term, it depends. If you're holding a crypto for more than 1 year and then you're selling it, exchanging it, and there's a taxable event, then it will be in the long term tax regime. If you're doing this on a less than a year basis where you're going in and out and you're making trades, then this will be short term capital gain. And short term capital gain and crypto income that you receive as a passive person. For example, most people are passive in crypto. So whenever you receive staking income and liquidity pools and airdrops, all of that is taxed at the federal tax bracket. That's crypto income and short-term capital gains. So basically, wherever you end up in your tiered tax bracket, that's where you're going to start paying your crypto taxes. Okay. And long-term capital gains rate is 0%, 15%, and 20%. And if you have an NFT, there is a look-through provision in that is 28%. Okay. So remember those things. So then, obviously, once you've done all the legwork and all the stuff is properly in, it will go into Form 8949. And then Form 8949 is part of Schedule D. Then that's where you would need to make any kind of adjustments to the 1099 DA. And Code B is the basis adjustment. So I mean, if I was to make a best guess, the IRS for tax year 2025, for which the taxes are due in April 2026, they they are expecting a lot of adjustment codes. So basically, make sure you're putting the right adjustment code. And I'm sure that TurboTax also probably has a place. Most CPAs and tax practitioners, we typically have a super duper software that we're running with all kinds of bells and whistles. But if you are using TurboTax, there has to be a place in TurboTax for you to make that adjustment as well. Okay. So now we'll talk about how to what that adjustment looks like. So let's go. I'm going to back up a little bit. I'm going to go back to how you can start doing your crypto taxes if you haven't done so already, and then we'll talk about the 1099 DA, how that fits into your global crypto tax accounting, and how to make that adjustment, the code B that I was talking about. Okay. So how do you do your crypto accounting? So, well, we know very well that if you are part of this centralized exchange, this is the first year they're going to be issuing you the 1099 DA. So all the data in that centralized exchange is going to be covered by the form 1099 DA. But and then you must pick FIFO, LIFO, HIFO, and you need to know how those play in. So if I could just give you a little bit of a summary on FIFO, LIFO, HIFO. So FIFO means first in, first out. That is, so if you have purchased crypto, let's say from 2017 to now, so whatever you all that inventory that you have, whenever you think of crypto, think of uh, crypto as inventory. Why? Because you've purchased so many lots. And in cryptocurrency, because it's part of the property regime, the lots are unique. What does it mean? So let's say that I purchased 0.00345 Bitcoin on January 10th, 2025. And at that time, the Bitcoin was, I'm just going to make it up, it was trading at $90,000. Those things, 9,000 multiplied by the quantity, that will give me my cost basis and that date. So the quantity, the actual, your cost, and the date, those things can never be replicated unless there's a miracle. Which no, because obviously the date can never be replicated, right? So every time you purchase crypto or you get into another crypto exchange, swap, or whatever the case might be, those are all considered as unique lots, basically. So then you're basically combining it. It's an inventory. You're just think of it as like your inventory warehouse, and then what you sell. So if you could have purchased the same Bitcoin at multiple time in the last few years and multiple intervals. So which ones will you sell first? This LIFO, FIFO, HIFO is the accounting type that dictates which you will dispose first. FIFO stands for first in, first out. So whatever you purchased initially, those will be disposed first. LIFO stands for last in, first out. That means those that you just acquired recently, those will go first out. HIFO means highest in, first out. That means the crypto that is the most expensive, or the one that costed you the most, that's going to be disposed first. So this is how you need to think of this. So if you can just visualize for a second that you are in crypto and crypto is part of this big inventory that you have, and picking the right accounting method depending on the type of investor and trader you are, it's going to make the biggest difference in your tax liability. That is in your arsenal. So make sure you read up on that. FIFO, LIFO, HIFO. Now let's go to the second one. So if you have self-custody wallets, right? Let's say you have a MetaMask, you have Kepler, Ledger, Exodus, Trust, and there's so many other ones. Say Pal, you name it. I mean, there's just Tangem, um, Tau, so many different wallets. Those are not part of the centralized exchange system. So those are something that you're controlling. You know very well that data. There's no central body that's reporting that data. Sure, you know that data, but it's upon you as the taxpayer to report any taxable events in those self-hosted wallets that you have. And that's why you need to use a third-party crypto tax tool to manage the crypto tax accounting for your self-custody wallets. So what you will do, you will plug in your wallets, and I've listed few of the third-party crypto tax tools that are actually pretty popular. But again, there are so many, and most of them are non-US based. But as long as you know what the tax rules are, you need to read up the glossary definition of these tools. Then you can manage the tools. You will know which, by picking what category, which is leading you to a taxable event versus not, and you're basically matching it up. So then you can get that gain or loss. So full data set is the key. And now, so now when you're doing this crypto accounting here, most likely you're connecting your centralized exchange data too. But when you generate the reports, then you need to exclude. Why? Because then you'll end up double counting, because your 1099 DA will have all the centralized exchange data, but your third-party crypto tax tool, when you connect all the self-custody wallets, you will need to connect your centralized exchange, because if you don't, then it will be seen as a sale rather than a transfer. But then this also will take into account all the 1099 DA data as well, that you can use these third-party crypto tax tool to also reconcile, basically, and provide all the cost basis. But make sure that you don't double count. So when you're providing those non-cost basis provided trades to the IRS on your 8949, then do not include the 1099 DA trades in that section. Otherwise, you're going to be overpaying or over-reporting, because the 1099 DA will cover. So if I was to, let me go ahead and show you this real quick. Again, I'm going to get to this, but think this is you. This is one individual on an annual basis. The 1099 DA form is covering all your centralized exchange gains and losses, right? This entire piece is covered by the 1099 DA. The self-reporting with the tax tools for all the self-hosted wallets, you need to report as honorary reporting. You have to. That is part of the law. You cannot say that you did not earn income or there was no capital gains or losses, because the IRS will find you at some point. So these tools, they will give you the full data, right? But don't plug in the tax data from the tools right away if you're receiving a 1099 DA, because most likely, since you've connected that exchange, the 1099 DA's gains and losses will also be shown in the self-reported, like for example, Koinly, you'll see them on there. So make sure you take those out, and then you let the 1099 DA flow, provide the cost basis from these tools, and with the adjustment, that covers it. But make sure that when you're doing your own, those are reported separately, line by line, on your 8949, like you've been doing in the prior years. This is the biggest thing that you need to make sure. Why? Because otherwise, this will basically lead you to you're going to provide duplicates, and you're going to then, your balances will be out too. If you were to, if the IRS was looking at your crypto data, and if you actually provided the entire report from these third-party crypto tax tools and also the 1099 DA, then basically you're providing more than you should have, and you're now in negative territory in terms of balances. Okay, so now let's go back to our slide. So this is the thing that you need to avoid. So everyone that has been doing their own taxes on these third-party crypto tax tools, this year, make sure you're not including data that is in the 1099 DA. You're not double counting it as part of the tax reporting that you typically do. You just need to fix the cost basis there on the 1099 DA with the help of these third-party crypto tax tools, because you have a warehouse of crypto inventory, and each of those cost bases, you're not going to be able to just track them in Excel. So this is how you complete the picture. Otherwise, it will be very, very difficult for you to complete. And then also, where will you have issues? Let's say that you're picking LIFO in Koinly or coin tracking or SUM, but then you're picking FIFO in your Coinbase. That's going to give you a data mismatch. There's no way you're going to be able to provide that cost basis data because Coinly will show you something else, and then Coinbase is thinking that, oh, we're going in this other chronological order. So this is something that you need to make sure that you're not double counting, and you're not basically overpaying. All right. So remember, most crypto tax tools, there are non-US based. Don't assume just by connecting all your wallets that it's going to spit out a tax report and that tax report is going to be it. You must know the laws, right? The taxable events and the non-taxable events. You cannot easily change FIFO, LIFO, HIFO from year to year unless you know what data migration looks like. And a lot of these third-party crypto tax tools, they do have a data migration section, which you can go and lock in your data from prior year and then start and then rearrange to LIFO, FIFO, HIFO. But again, you need to know how to do this. But there's an option now, okay? Liquidity pools, DeFi projects, bridges, all of those, they basically break the chain. So make sure you're connecting, you're merging, you're parsing, you're connecting the dots, you're connecting this entire puzzle. So this way the cost basis is following you from the inception, okay? All right, okay. So, okay, this is my quick little summary on what kind of, when you basically start doing your accounting on a third-party crypto tax tool, like what is it that you need to do? Because most of these are non-US based. First of all, pick the right country. Make sure it's US, okay? Attach all your wallets, go to settings, and make sure that it's starting January 2025, you're picking wallet-based accounting and not universal accounting. You're picking wallet-based accounting. Sync all your transactions from all the wallets. Make sure all the bridges, liquidity pools, DeFi transactions are good to go, meaning that you've categorized them, you've linked them together as you see them on your subledger in these crypto tax tools as you go chronologically. So if I was to tell you how I do uh, whenever I'm going through a client's portfolio, here's a pro tip. First, I will go wallet by wallet and go through the transactions because you can actually see what's in it, what's going out, and then I categorize them. And then I go basically cumulative wallets and I go chronologically. So then I can see where there was a transfer that was broken, where there was a bridge that was broken. I can see all those. So if you use this methodology, you should be able to fix a lot of these issues that come up. But again, if you if you are into liquidity pools and they're giving you a higher balance when you get out of those liquidity pools, then you have to duplicate a transaction. You have to show the right form of this. Otherwise, you're not counting that income properly, and then it's going over to capital gains. So make sure you know these rules, and again, they're not too complicated, but they can be complicated. They can be challenging, especially when in blockchains where there's lack of integration, and you're not going to get full transactions. So remember, in a banking system, what happens? You typically have one in, one out. So we see that same methodology in crypto with a hash. A transaction is a hash. But with the evolution of smart contracts, now one hash can have multiple events. You can have 3 cryptos going out, 2 coming in. So you need to make sure all those transactions are coming in. So one hash doesn't mean one transaction going in and out. So make sure if it's a ERC 1155, starting from that, you can have more than one in and out where there's one corresponding buying one NFT for the other, one trading one NFT, one crypto for another NFT, another crypto, and another NFT. So then you can have 5, 6 different transactions all in one hash. So that is the challenging part of blockchain. So generate the tax reports in the third-party crypto tax tools. Okay, make sure there's no duplication. Remember, we talked about this duplication. This is the big one that everyone needs to watch out for. If you are, again, I will repeat this again. If you have been doing your own crypto taxes and you have been using your own third-party crypto tax tools and you're pretty good at this, make sure that this year and you have your centralized exchanges connected to your third-party crypto tax tools, which you should. Make sure you're not duplicating the data that's showing up in tax reports that you would normally plug in otherwise, because now that data will have those 1099 DA data as well. So you're going to take part of that data out. You're going to go ahead and report that, and then you'll report the 1099 DA, and that combined will be your full crypto tax data for the year. Okay. This was the one. Remember, make sure your accounting methodology, whether it's FIFO, LIFO, HIFO, all of those are in sync. The centralized exchanges, the third-party crypto tax tools, and sure, you can have two different accounts in a third-party crypto tax tool, and you can certainly put two different wallets and change the methodology in one wallet. For example, you might have a cold storage wallet, and you can certainly change methodology in that one particular wallet versus the other wallets. But you need to make sure that when you're transferring one crypto from one wallet to another, and if they both have different accounting methodologies, the cost basis is going properly to the other one, because that those things matter. But you can certainly mix, match, parse. You can get very creative with tax strategies in crypto. And remember, do not forget the FBAR filing. FBAR is the financial reporting filing. It's the form 114. A lot of crypto traders typically have they have accounts in exchanges that are non-US based, that are maybe in Singapore. I know a lot of I back in the day, I remember there was KuCoin. And I know that there still are Mexi. There's so many other ones. But if you have more than $10,000 combined in all of your assets, whether it's crypto, bank, anything in a foreign jurisdiction at any given point during the year, then you are owed the FBAR reporting filing for the end of the year. So you're reporting basically your year-end balances. It's only reporting. There's no tax due. The IRS just wants to, or the FinCEN just wants to know what you have in international jurisdictions. So remember this. If you have been trading, and I know that there's a lot of crypto tax folks that go into Bybit, that are using derivatives, margin trading, leverage trading, and very exotic, very complex, getting crazy leverage ratios. Those are done typically on the outside exchanges that are non-US based. Make sure if you have more than $10,000 cumulatively in all of those exchanges, and including all your banks and everywhere else, at any point during the year, you need to do the FBAR filing. Okay, it's just reporting. All right. Enforcement and penalties. We know the IRS is using AI analytical tools. They have a big contract with the firm Chainalysis. Chainalysis is it's heavy in tracking crypto. So make sure that you're reporting all your crypto trades, because at some point the IRS will send you a letter, like they have been doing now, and all that data that is being covered in these letters is from 3-4 years ago. So they take some time, but then they come. So make sure you get to them before they get to you. All right. So this is a new section that I wanted to discuss. This is going to be the crypto tax amendments, and I know a lot of folks, it could be on the back of their mind, an elephant in the room, where they know that sure, in prior years, because the rules were all over the place, You didn't know what was a taxable event, you didn't know what was going on, and there's a possibility where you could have underreported or not reported at all. I just want to let you know that crypto tax amendments, they're not that difficult. They're not that difficult unless you have a lot of data. Sure, then you can use tax strategies, and especially in prior where you had universal accounting that was valid, you could have gotten very creative with a tax strategy. Then you certainly should use a tax practitioner or a CPA. But if you want to do crypto tax amendments yourself, you should be able to in your TurboTax as well. Okay, so this is not too difficult. It's time to you know to basically rest this matter. If it's something that's bothering you, go ahead and do the amendments. The statute of limitations, we'll get to the actual form. Statute of limitations typically is 3 years from the time you file. That is a perfectly good tax return. If it's fraudulent, if there's a underreporting or overreporting by 25%, that it could be 6 years or more. 6 years is typically the case. And if you don't file your taxes, then that statute of limitations never expires. Not filing and a fraudulent return, it never expires. So the IRS can always, always, always open your a prior year at any point. So make sure, report it, let that time lapse, and then you're good to go. All right. Yes, and okay, this is the same thing that we've talked about before. If you use a third-party crypto tax tool, then you should be able to get all that data. If you're missing some data, then you need to, you really search for that data. I know some of the exchanges have basically gone away. So basically, you can get all that data back or try to recreate some of that data. But if you can, please report in full. Okay. This is what that crypto tax amendment form looks like. For individuals, it's 1040X. For businesses, it's different. It's just the same thing, but there is also a place where you have to provide an explanation. So then once you do all your proper crypto trades, 8949, you've removed all the previous erroneous ones, or maybe you're adding on to it. If I was to zoom in, you can see that there's an original amount section, then there's a net change section, then there's a correct amount section. This is the summary form. The 1040 itself goes with the 1040X. And this basically you have to provide an explanation here as to why you did the amendment and what was the case. And it will compute a tax liability for you or a refund depending on what the case is. Well, I hope I was able to cover as much as possible, and I am more than happy to do another live section or live event in the next 2-3 weeks as we get these new 1099 DA forms. So make sure you like, subscribe to our channel, and make sure that you're emailing us for any kind of questions that you might have, and have an amazing 2026, and that's it. So have an amazing day. All righty, take care.